Hello and welcome to another 30-minute Thursday. My name is Amit. It is 2 p.m.-ish in the Pacific Northwest, and we are once again live on Facebook. How's everybody doing? I hope you're staying safe. I hope you're staying healthy. I hope you're staying sane. Very important to stay sane in this always changing world. For everyone who is celebrating Passover, I wish you guys a wonderful holiday, a kosher Passover, as they say. I am not the most observant person, to be perfectly frank with y'all. So, but I still celebrate the spirit, and I still celebrate the people who celebrate in full. So to everyone who's celebrating Passover, Chag Sameach, Chag Kasher, happy and kosher Passover. And tomorrow is Good Friday. So for all of y'all who are celebrating Easter and Good Friday, hope you guys have a meaningful holiday starting tomorrow, of course. Yes, the Last Supper, as a little bit of historical reference, the Last Supper was in fact a Passover meal. And, you know, so there's a lot of correlation between Judaism and Christianity in some of these things. You'll notice that my hands are not moving, and yet the screen is. Yes, I'm working on my telepathy and trying to actually, no, it's not true. I'm working here at the studios of New American Funding, and I've got my friend and colleague Dana, who's helping me in the studio, and she's looking at me on Facebook. I'm watching her watch me while I'm doing this live with y'all, and she is rearranging my computer here to kind of get the better angle. Notice, no hands once again, and yet the stuff is still moving. It's kind of cool. It's still a work in process. We're going to get to the point where I'm going to put a mark on the table here where the computer should go. And we're going to find the angle that is going to make the most sense for the laptop and the camera and everything else. But we're not there yet. Oh, I see myself looking at myself. Wow, it's kind of like a strange deja vu. It's a feedback loop of all the more horrible things. I may seem like I'm comfortable in front of this camera, and it's only because I'm so used to it at this point. I've been doing it for 3 years. 3 years I've been doing 30-minute Thursdays. And I got to tell you, I'm not any more comfortable with the way I look on camera, with the way I sound. I'm just at that point where I've stopped caring, because this is my face and this is my voice, and it is what it is. So here we are, and hopefully you guys are hanging in there with me. Let me tell you what I want to talk with you guys about right now. A couple of different things. First of all, the big picture. The big picture is that the economy is contracting. It's going to go into a recession if we're not already in a recession. And that is uncomfortable to discuss, because recession means that it sounds negative, and it is negative. It's a cycle, right? Our economy is cyclical, which means that we've got times of expansion and then times of contraction. Contraction is also called a recession. And when recessions happen, among other things, people lose their jobs, and that is really scary. It's very, very uncomfortable. It's not something that I would want to talk about in any kind of cheery, sort of lighthearted way. It certainly makes a lot of it's a problem, let's put it that way. And so I don't want to gloss over that. But right now we're at like a 3.6% unemployment rate. And I think those numbers are cooked. I think the books are cooked. The Bureau of Labor Statistics, the BLS, someone said earlier today, we should take the L out of that and just call it the BS. And, you know, the reason we say that is because they cooked the books for many, many months and reported incorrectly on how much employment contraction is going on in this economy. And that's important because the Federal Reserve Board has been increasing their interest rates in an effort to cause unemployment. I know that sounds mean-spirited and hard-hearted. It's not intended to be that way. I can't speak for them, but that's what they're doing. And they're doing that because they want to reduce the rate of inflation. And when people lose their jobs, or when people feel like jobs are scarce, they don't go out looking for more income. They don't go to the next company that offers them a sign-on bonus, for example. They don't negotiate with some other company that says, hey, we'll hire you and we'll pay you X amount more than what you're currently receiving. That doesn't happen in a recession or in a contraction period. And that's why the Fed wants to see that happening, because when you have wage pressure downward, meaning that people are getting paid less, they've got less money to spend. When they've got less money to spend, they buy fewer things, and they buy the things that really matter, and they're very conscientious about what those things cost. And all of that has this impact of reducing or containing the rate of inflation, which is what the Fed is literally has said and is supposed to be doing. So this is all part of the plan, if you want to call it that. And now we're finding out that the plan has been working for some time, but the statistics that are being kept and the measures that are being used to kind of see how certain parts of the economy are going, those things have been a little bit, shall we say, fake, a little bit, shall we say, manipulated, the thumb on the scale a little bit. And I'm not pointing a finger at any one person, but there are institutions that have institutional reasons for doing what they do. And so now we're going to find out the truth, and that's going to start trickling out. In fact, tomorrow we're going to get some additional information about unemployment and employment, and we're going to see how things are going with that. And I think going forward, we're going to find an avalanche more of information that kind of creates, or that will at least show and illustrate, that we do have contraction in the workforce, that we do have the elements in place to contain inflation. And what that means in the big picture for mortgages is that interest rates are going to come down. Long-term 30-year fixed mortgage interest rates will come down as inflation comes down. And that is going to be welcome news. And that is going to be quite a relief. And we're looking forward to seeing that. I don't know exactly when that's going to happen. I don't know exactly how much down they're going to come, but they're going to come down. And when they come down, a lot of buyers who have been kind of hibernating or waiting, lying in the weeds, so to speak, they're going to come out and they're going to start looking to buy a home, which is great. On the one hand, we're excited for that. Of course, we want more buyers and we want to close more deals. As I say, I close loans and I crack bones. I'd love to close more loans, but here's the catch. We don't have a lot of inventory. In fact, we have almost no inventory. And we're not going to suddenly get a surge of inventory on the market, especially in this part of the world, in Western Washington, Puget Sound. We just don't have the space for it. We just don't have the available land. We don't have the fast permitting that allows a home builder or a land developer to buy a piece of ground, go to the city or the county or the municipality and get permits for chopping it up into quarter-acre lots or 5,000 square foot lots or whatever it is, and then build homes on top of that. That is not fast here in Western Washington. And nationwide, even if it is fast, because some municipalities are faster than others, even if it is fast, you're still only looking at about 15% of the total available inventory of homes for sale come from the ground up, meaning they come as new construction. The rest of it is what we call previously owned, resold homes. And the people that own a home, like myself, for example, they're less inclined to market their home for sale and get out of that home where we've got currently really low interest rates because we locked in those rates a year ago or 2 years ago or 3 years ago. And now the rate is higher. Even when the rates come down, I don't know that they're going to be as low as where we were at the best time, like 2.75 on a 30-year fix, 2.875. We're probably not going to see that. We might see 4.5, which is still great by comparison, but it's still, not 3. And so we'll see what happens, but there's not a lot of inventory. And that means that competition already in Western Washington and the Seattle area, competition's really steep. And what does that look like exactly? What does that mean? For those of you who don't live and breathe and spend every waking moment either closing loans or cracking bones, I'll tell you that what it means is that I've got a lot of clients right now who are struggling because they write offers. And guess what? 6 other people wrote offers and they are offering more money than what my clients are offering. Or they're offering a larger down payment, or they're offering something else that is just not competitive, or they're paying cash. And so that means that my clients, as good as they are in their financing arrangements, they're just not winning. And that's only going to get worse and worse and worse as rates come down and more buyers come into this market. So how do we win in this market? That's where the rich uncle comes in. I want to tell you about the rich uncle loan. That I coined the phrase. No, you may not use it. Actually, you can use it. I don't care. But I want you to remember it. Whatever else happens, I want you to remember it, because as I tell people, every so often, we need a rich uncle. We need somebody in our corner who's just going to write a check and help us get from point A to point B. And that's what this loan can do for people. So I want to tell you a little bit more about it. It's not actually called the Rich Uncle. It just went through a rebrand themselves. They didn't consult with me, the good people at Buyer Accepted. We've changed the name to NAF Cash, which is fine, but it ain't the Rich Uncle. And the Rich Uncle is something that you're going to remember, because one of these days you're going to say, boy, I wish I had a rich uncle. And then you're going to go, bing, I do have a rich uncle. His contact information is right over there. And you guys are going to call me or you're going to email me, and we're going to see if we can find a solution for you. But let me tell you what the rich uncle can do. And I'm going to illustrate with a story about clients of mine. They're great clients. They're friends as well. I helped them many years ago. They will remain nameless, of course. This is all anonymous as far as that goes, because the names are irrelevant, but the situation is very relevant. And I want to share it with you because it'll help you remember for the future, if you know people like this, or if you work with people like this, or if you yourselves are people like this. Here's the deal. I helped them many years ago buy their first home or finance their first home. That worked out great. They moved in and they did what people do. They settled in, they started a family, the family started growing. And over the years, the family has become quite large by comparison. They now have 3 kids, and the ages are between 6 and 11, I believe, or 6 and 12, right in that age group. And they also have pets for the kids. And guess what? They outgrew this house. They just plain don't have the space to stay in this home. And so now they needed something new. Now we explored some other options. We explored the idea of, them taking out equity from their current home and adding square footage and doing other things. Talk about a daunting task, right? I mean, to add on to an existing home, it's not for the faint of heart. It's not something that you start on a Monday and finish on a Thursday. It takes time, and it takes money, and it takes a lot of things that are not necessarily easy to come by. And so end of the day, they decided we're just going to find a new home. But here's the problem. They could not buy the new home until they sold the old home. Let me repeat that, because I stuttered on the most important parts. They couldn't buy the new home until they sold the old home. How do you make that happen? You call your rich uncle. That's exactly how you make that happen. This is what I'm talking about. Why could they not buy the new home first? Well, a lot of reasons. Number one, down payment. They just didn't have the down payment. Yes, they could have taken cash out of the equity that they have in their current home. They could have done that. We could have set up what we call a home equity line of credit and taken that cash out and put it in the bank and used that as a down payment. Sure, no problem. But guess what? Now, in the lending world, they've got to qualify for a loan on the new home. And what we're going to use, or what we're going to count against them, is the mortgage on the old home, the second mortgage that we just opened on the old home to take all that equity out for the down payment, the mortgage on the new home, and then whatever other stuff, car payments, credit card payments, everything else that would show up on their credit report. And not everybody's in a position to float that much debt. Even if it's short term, you still have to qualify for financing. It just wasn't there. So they had limited options. They could have found the new home and written an offer and told the seller, hey, we'll close on our purchase of your home right after the sale of our old home closes. That's what we call a contingent offer. The purchase is contingent. The purchase of the new home is contingent on the sale of the old home. That is not the best offer out there. And honestly, there was another competing offer. There was a buyer that wanted this house that my clients wanted to purchase. And this buyer was offering 20% down payment, normal financing, no contingencies, like I got to sell another house or whatnot. And they loved this home. And so we had to get competitive. And once again, the rich uncle helped them get competitive. By that, I mean, we did this. We wrote an offer. This is the affiliate, the Rich Uncle, the company that is the Rich Uncle, an affiliate of New American Funding, wrote an offer on my client's behalf. And they said to the sellers, we will buy this home for cash. We'll write a check for it. Here's proof of funds. We got plenty of money in the bank. We'll buy this house for cash. And that got the seller's attention. And so the way the rich uncle loan works is basically they have a contract to buy the new home. We're going to call that the subject property. And so that contract gets signed by rich uncle, and then it gets signed by the seller. As soon as that happens, there's a second contract between rich uncle as the seller and my clients as the buyer. Rich uncle selling the subject home back to the actual clients. So those two things happen within 48 hours, one of the other. Now, everything else is standard. It's commonplace as far as there's an inspection, there's negotiation on the inspection, all the things that would happen without the rich uncle being part of the transaction happened. The closing on the purchase is a little bit tricky because rich uncle wants to make sure that you're going to sell your old house so that you can buy your new house. And so in order to give rich uncle that warm fuzzy, you have to actually bring your house to the market. You have to list it for sale. And so my clients decided we're going to list our home for sale on a Thursday. And we coordinated all this with rich uncle, and everything was, and the broker, of course, who represented the clients on their purchase of the new home, as well as the sale of the old home. All of this is in coordination. This is what teamwork looks like. So clients list their home, their old house for sale on Thursday. On Friday, the very next day, rich uncle writes that check, buys the house for the clients. The moving van shows up on Saturday, gets all their stuff, gets their kids, gets their pets, gets all their mess out of that house and moves it into the new house. That's right. They are moving into the new house. Rich uncle is renting it back to them. So they move into the new house. Kids get to decide which room is going to be theirs. The dogs mark their spots in the backyard. They do all that stuff. They start unpacking. On Monday, my real estate broker partner, who's helping the clients sell the old house, on Monday, there's carpet people coming because the kids, they kind of messed up the carpet a little bit. The dogs kind of messed up the carpet a little bit. So they needed to replace that. Monday, the carpets came in. On Tuesday, the very next day, the stagers came in. For those of you not in the industry, staging is basically putting furniture in and around the house to make it look livable so that buyers have an idea of how big a bed can fit in this bedroom or what they could do with that breakfast nook. It just gives it a better look to make it more marketable. So on Tuesday, the stagers come in. On Wednesday, the photographer comes in to take the professional photos of the house, cleaned up, staged, and ready to hit the market in earnest. And the sign gets put in the front yard. We are open for business. So yes, it took about a week between the beginning of that process and the end of that process. And it's not the best as far as the use of time goes, but this is something that needs to happen. Sometimes you just got to juggle all these things. So my clients already are already in their new home. The utilities are in their name. The mail goes there. Their house is on the market. They got an offer to sell that house, that old house. And so the way it's working is basically the buyers on their old house are going to close on the 19th of this month, April 19th. And we've already coordinated with rich uncle that we're going to buy the house back from rich uncle on the 20th of April. So we're trying to do this as seamlessly and as smoothly as possible, as quickly and as coordinated as possible. But let me check my time. Okay, we're looking good. For these clients, the idea of being able to move into the new house and get the kids settled and then go take care of the old house and really get it ready for prime time, as we say, get it ready for the market. That was a daunting process. How do you do that? I mean, honestly, think about the logistics. I have done this myself. When we bought our when we bought our new house in 2016, we had to sell our old house, which we had bought at the very end of 2003. And we lived there for 13 years. And we didn't have kids and we didn't have dogs. And it was still difficult. And it was a completely different market in 2016 than it is in 2023. Completely different. We had time. The seller actually was happy that we wrote an offer and was willing to look at a contingent offer, but that's what we did. I had to sell the old house before I could buy the new house. And it was difficult and it was risky for us because that seller, my seller, the one that was selling me the new house, and if you guys look at my Facebook feed, you see that great view. I fell in love with that view. Someone else might have shown up and fallen in love with that view and written an offer. And I was at risk because I was contingent. Someone else could have said to the seller, hey, I'll take it off your hands right now. If that were to happen, my seller would have had to call me up and say, hey, you got 5 days to perform. Either eliminate the contingency and get ready to close on the purchase, or I'm going to sell it to somebody else. That's a risk that you take when you write a contingent offer. That's a risk you have to face when the seller accepts a contingent offer. And guess what? This market, as I just spent the first part of this broadcast or this update or whatever talking with you about, this market's about to go off. When rates come down by another 0.5% or 1 full percent, or who knows how many percentage points, hopefully more. But when that happens, it's going to blow up. Do you think, honestly, that anybody is going to take a contingent offer, that anybody needs to take their house off the market and let you tie it up and hope that you get to sell your old house in order to buy the new house? Do you really think that they're going to do that? Or are they just going to push that offer to the side and talk to the guy that wants to pay cash? Your rich uncle can pay cash. And that is a huge benefit, even if you don't have a home to sell. Let me tell you about another one that I'm working on with Rich Uncle right now. These are great buyers, wonderful credit, great jobs, great employment, great income. They're currently renting. They don't have a home to sell. So it's technically a lot easier for them, but they don't have a large down payment. And that is a bit of a sticking point with some of these sellers. And so they tried the traditional way, but they only have a 5% down payment. And sellers want to see a larger down payment. It just makes them feel more warm and fuzzy. Okay, so guess what? Rich Uncle's going to come in there and buy that next house for them. And when Rich Uncle talks, the sellers listen, because Rich Uncle brings that big checkbook with him and says, hey, I'm going to write a check in 10 days or in 14 days. You're going to have your money, all of it. And that is really appealing to a lot of sellers. Even in a competitive market, that is super appealing. And where a lot of times we find buyers kind of pushing up the purchase price, meaning escalating, offering more than what the sellers are asking for in order to win and push out their rivals on that property. When we have a cash offer, many times the escalation, meaning the amount that the buyers are willing to pay above what the sellers are asking, the escalation is a lot smaller because cash is still king. Cash is still very compelling because you don't have to worry as a seller that something's going to fall through, that the buyers are going to lose their job. Remember, unemployment's going to increase here. What happens if you're in a contract and the buyers lose their job? That's a problem. What happens if the buyers have their down payment money in cryptocurrency or in stock market and the markets come down and they can't get the down payment money that they need to get? Cash solves a lot of those problems. So to be a cash buyer means that you've got more bargaining power and more negotiating strength than a lot of other people. And when we get into this market that's going to go off, and it will, and I'm here to tell you, I've been telling you for months, but I'm here to tell you it's going to go off. And I'm excited for it because I like to close loans, but it's going to be hard too. People don't remember what 2021 was like. I was writing 10 pre-approval letters a week, and maybe 1 or 2 of those offers was accepted. That means that 80% weren't accepted. That's hard on people emotionally. That's hard here in your heart. It's hard in your mind. Like you start to think, maybe I'm never going to get a home. And now what happens when my lease is about to expire in 2 or 3 months and I'm still swinging and striking out and I can't get a home? Do I just renew the lease? All these things come into play. Rich Uncle can write a check and make a lot of problems go away. And I love that. And that's something that New American Funding is offering that no other company that I'm aware of is doing. And that is a huge opportunity for us. It's an opportunity for our real estate partners. It's an opportunity for our clients, whether they've got a home that they need to sell in order to buy the new home. Maybe they've outgrown it like my clients have. Maybe they've become too old and they're in their home now. They've got a ton of equity. They also have a ton of stairs and they want to move into a smaller home, 1 story, no stairs, but they only want to move once, right? So they want to buy the new house before they sell the old house. Rich Uncle can help with that. Or maybe they just don't own a home at all, and they are just not being very competitive, or not in a position to be very competitive in this market with escalation clauses and competing offers and things like that. Maybe Rich Uncle can just be that guy in the corner, in the back. What's the word I'm looking for here? The guy in your corner in a boxing match, let's put it that way, who's going to help you out, who's going to give you some good advice, who's going to give you some good strategy, who's going to teach you how to win in this fight. Rich Uncle does a lot of things just by writing a check. And I'm really excited to be able to do this. I'm closing my first 2 Rich Uncle transactions this month, meaning that the clients are actually buying the home back from Rich Uncle. And that's really exciting for us. So this is great stuff. Let me check my time. We're just about at that hour, my friends. I can't believe it happened so quickly. But I'm really excited about all the great things that are happening. I know that it's scary when we talk about recessions. I know that when we talk about unemployment going up, that's scary because people we know may be impacted by that. It may even be us that's impacted by that. And that's terrifying, right? That old joke, it's not really a joke, but the saying is, when your neighbor loses their job, it's a recession. When you lose your job, it's a depression. That's real. That's legitimate. But to every dawn, every darkness has light. To every night there is dawn. We will get through this, and there will be an upside as well. Even if we see unemployment go up to say 5%, still means that 95% of the people are working, and they're going to be in a position to buy a home. So it's coming, guys. It's coming. If you are looking for a home, do it now. Call me, call your real estate broker. Let's get started before everybody else wakes up and comes running into this market, because when that happens, the competition is going to be furious, and we might not be closing loans. We might have to crack some bones in order to get you into a home in the first place. I'm kidding, of course. We don't do that, but we do everything we can to help you get there. And one of those things is the Rich Uncle loan. Let me know if I can write a check for you. It'd be my pleasure. Until next time, please, my friends, stay safe, stay healthy, stay sane, always stay sane. And for everybody who's celebrating either Passover or Easter, have a wonderful, meaningful holiday. Enjoy time with your families. And I will see you next Thursday right here on Facebook. Y'all take care. Bye-bye.